Hey everybody, welcome back. Doing a very, very special live stream for May the 4th. So May the 4th be with you. Isn't that fun? I love Star Wars. I'm not wearing a Star Wars t-shirt today. I'm wearing my Superman t-shirt, but I am going to do a pretty super trade today. And I want to get into what exactly I'm doing. Now, as always, I don't offer financial advice. This is just my opinion. This is what I'm doing. And so these are not trade recommendations at all. Now, stocks that are selling off that I am looking at. Today, I am buying up some stock and I'm doing it in one of my registered accounts. Now, one of the problems with registered accounts is that I can't actually do a short put. That's what I want to do. I want to sell a short put and agree to buy the share if it drops even further than it already has. And if that stock doesn't go down to that level, then I get to keep the premium that I would collect today. So today I'm going to show you how to synthetically do a short put in a registered account. So this is an account like an RSP or a TFSA or any other account where I'm not allowed to sell short puts, where I have to own stock. Now, one of the problems with owning stock in general is that I have downside risk. That the moment that I buy stock, if that stock goes down, my account is now at a lower valuation. If the stock goes up, that's fantastic, but that's not always what happens. So today I'm going to show you one of my trades that I placed, and I placed it quite a while ago actually, and what I'm doing now today to help protect this position and to help dollar cost average down and put myself into a less risk situation. So let's get into this. And thank you for joining me on my impromptu live stream. If you're watching this and it's not during regular market hours, that's because you didn't have your notifications on. So please turn on your notifications for my channel so you know when I'm going to go live, because I'm going to be trying to do this kind of thing more often. And hopefully you can see my screen. So this is a shot of TradingView. Up in the corner, we are looking at the stock Uber, and it has just reported earnings and it is down substantially. My face is covering up the level, but it's currently trading at just over $27. And you can see the candle is way down here. It is gapped down overnight and it is below these Bollinger Bands, well below its moving average, and it's a time to potentially pick up more shares. Now, you'll notice that I have this Fibonacci retracement over here. Now, this was something that I was playing with a while ago, and if you look at it, I'll just show you how quickly this works. So let me just click on this and delete it here for you. Let's just see if I can here. So if we go up to this, we can do a fib retracement. And basically what I'm doing is I'm looking at a low point, and this is going back in time. So this is back in September of 2021. And what I can do is I can drag the tool and I drag it up to the top of where the stocks are trading, and I would place it on the day that I was making the trade. So in this case, I was looking at this fib retracement back in October, on October 26th to be exact. So I'm going to put that on October 26th. And you can see what had happened was that the stock had rallied up and it was trending up nicely, and it had tested this upper resistance twice, and it had come back down and it had hit this first line in the fib retracement, and it was trading, it had actually traded below, and then it was upticking a little bit, and right here was when I decided I wanted to get into a trade because I was hoping that the stock was going to move upward at that point. Now, it's really key what I did here. I did not go all in on this trade. What I did was I put in a small, very, very, very small position, because the second I buy shares, there's a potential that this could go down. So on that day, the stock was trading at $46 and I purchased 100 shares. Now I want to reduce my risk and I want to make some money if the stock goes up. So I'll show you exactly what I did. On that date, on October 26th, the stock was trading at 46.02. And I did what's called a buy right. So I purchased 100 shares and I put in an options expiration date of October 29th. And my hope was that the stock was going to stay above $46. And if that was the case, if it had, I would be able to sell my shares for $4,600 just 3 days later, from October 26th to October 29th. Because I did this together, because I purchased 100 shares and I sold an agreement to sell the shares, selling a covered call, the initial outlay of capital was only $4,500.35. So my agreement was essentially I was investing $4,535, which was 65 cents lower than the price of the stock at that point. And if the stock went up, I would be able to sell it for $4,600 and I would make a quick 65 bucks in just 3 days. Unfortunately, that's not what happened. That was my hope, was that I was going to sell this for a credit of 46 on October 29th, and then I would have made a 7% return in just those couple of days. Well, actually, that's a lie, because what I've been doing is I've been selling covered calls ever since on that. So I'm not going to bore you with the details on that, but as this stock has been going down slowly, 44, 43, 43, 42, I have been consistently selling this covered call with an agreement to sell my shares, and I've been collecting money as I go. So my current cost basis on these shares is only $42.56 already, even though all that's happened is the stock has dropped since then. Now, cut to today. So let's look at the current analyst recommendations on Earnings Whispers, which is a site that I like to look at. Analyst net recommendation, 85% buy. The analyst target history, right now they're targeting the stock is going to be $59 next year, which is 115% higher than it is today. So there's a considerable upside assumption on this stock. And if we look over at Seeking Alpha, which is something that I like to use, I can see that this is a quantitative rating on a whole. Wall Street ratings are a strong buy, but really what I'm looking for is this quant rating. Now, if you're interested in getting an access to Seeking Alpha, I have a discount coupon. I'll post a link down in the description of this video, and you can do that. You can get into Seeking Alpha for a 50% discount, which is pretty awesome. So this is not really a strong buy, and I'm leery to buy at these levels, but what I'm willing to do is buy if the stock goes even lower. So let's look at a trade setup that I did today. So in this case, I have a very high probability of profit on this. I'm going to turn my face off here for a second so you can see. But here's the stock. And these are the weekly candles. So we're looking back quite a ways. And I have set this line here at 23.60. Now that's the amount that I'm going to pay today. $2,360 to buy 100 more shares. Now remember, I bought some shares up here when the stock was trading at now $42 in my cost basis. So if I have 100 shares at 42 and 100 shares at 23, even if the stock does stay at these levels, I am going to have a much lower cost basis, and I still haven't overextended my position. So I want to place a trade that is going to make me money as long as the stock stays above 23.60. And so I'm going to do the exact same thing that I did before, but I'm actually going to sell an in-the-money covered call, which creates a synthetic short put position. So what I do is I choose to sell the 24 call that is expiring in 16 days. And that's an agreement for me to sell these shares for $24 a piece. But at the same time, I'm also going to buy stock. So I'm selling one of the May 20th, 24 calls. And for that, I'm collecting around $3.80 per share. Then I'm buying 100 shares of Uber stock. So my net debit to enter this trade was $23.60. So that's the most that I can be out of pocket on this trade. The most amount of money that I can make is 40 bucks. Now you think that that's probably pretty low valuation, but let's take a look at what that looks like over time. So I've got this, I've placed this trade into my rolling options record keeper, which is available on my website. It's also available for any patrons, and it is early in the month. So if you're not already a patron and you're considering signing up, this is a perk of signing up for the options tier. Becoming an options tier member, you get to download the rolling options record keeper as a perk to becoming a patron. So awesome time to be joining Patreon. Now today, I've already made this post in my Discord chat room, and so all my patrons are well aware that I did this, but I made the transaction today. The stock was trading at 27.45, and it's got a high IV because earnings just came out and the stock is down considerably today. I've agreed to sell the stocks on May 20th, at a short call strike of 24. Now my total out-of-pocket cost on this is $23.60. So I record that as my cash requirement, $23.60. That's how much I'm out of pocket. And if the stock trades anywhere above $24, then I will make 1.64%. I'll make $38 over the course of the next 16 days, which is an incredibly large annualized return. This is a position where I'm looking to make about 20% annually if I was to do this repeatedly on different stocks. And in this case, it doesn't really matter where the stock is trading. If the stock is trading at 40 bucks, at $24 a share, at $25 a share, it could go way up. If it was trading at $32 a share, I'm only going to make $40. But the key to this is that I have an 85% probability of profit. If we look over here at the pop on this, 85% probability of profit, which is considerably higher than just buying stock today. And that profit is quite large. Like 1.6% in 2 weeks is a massive return when you do this repeatedly. Now, worst case scenario is that Uber drops down below, and it can drop another $4 before I'm even tested and before I'm even worried about this position losing money. And then long term, now I have an even better cost basis because I've bought new shares and I've paid $23.60 for, and I've got my other shares, which I paid $42 for, and I can continue to sell calls on both of those. So it's a fantastic strategy. And one of the benefits is that it can be done in any account, RSP, TFSA, Roth IRAs, 401ks, doesn't matter, as long as the fees are low enough to do it. So that's my trade of the day. I hope you guys enjoyed it. My goal here is to get rich with you. So let's get rich together. Thanks so much for watching, and see you very soon.